Welcome to FYI, the For-Your Innovation podcast. This show offers an intellectual discussion on technologically enabled disruption, because investing in innovation starts with understanding it. To learn more, visit arc-invest.com.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests, and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.
Welcome to the Bitcoin Brainstorm, along with my co-host Yassine Elmandjra, Director of Digital Assets, and Cathie Wood, Founder and CEO and CIO at ARK Invest. I'm your host, Rod Rudy, co-founder of Bitcoin Park, a community-supported campus here in Nashville, Tennessee, focused on freedom tech, adoption, and a place for Bitcoiners to work, learn, collaborate, and build. We are now on episode number 10, and now epoch number 5. Thanks again to the support from Cathie, Yassine, and the entire ARK team. We are taking our monthly Bitcoin topic-based approach at Bitcoin Park and applying it to a monthly podcast series we're calling Bitcoin Brainstorm. Each month, we host a different topic, and we invite amazing people from a variety of different areas within the Bitcoin community. Our aim is simple: drive conversation around Bitcoin. And today, we're going to take a look at Bitcoin before the halving and a look ahead post the Bitcoin halving. So we have approximately 60 minutes and we'll be covering a lot as always. Let's do some quick introductions for everyone and then jump right in. Let's first start with my friend Will Reeves, CEO at Fold.
How's it going, everybody? Very happy to be with all these legends here. So at Fold, we build the best tools for earning, buying Bitcoin. Again, how do we make Bitcoin very simple for everyday people? And it has been a pleasure and a wild ride building in the Bitcoin space, as I'm sure all of you know quite well.
Yeah. Will, nice to have you join us. And let's get the DoorDash rewards from 3% back up to 7%. Please, mi familia. A little shameless plug there. Murch, engineer at Chaincode Labs.
Howdy. I go by Murch. I've been working in the Bitcoin space for a while. I contribute to Bitcoin Core, Bitcoin Stack Exchange, and I do a weekly podcast with the Bitcoin Uptech crowd. And a bunch of other things. Most recently, I've become a BIP editor just last Monday.
I love it. We're definitely going to link to those links in the show notes as well for people to check out. And my kids one day are excited to meet you, Murch, because I wear your t-shirt to bed and it's just a silhouette of Murch's face. And they're like, who is that? I'm like, one day, kiddos, you'll meet this guy. Now let's go to Mike Colyer, CEO at Foundry.
Yeah, Rod, thanks for inviting me. Love what you guys are doing down there in Nashville. I think it's great. As you said, I'm the founder and CEO of Foundry. So we support the Bitcoin mining ecosystem. We run the largest Bitcoin mining pool in the world, and we provide lots of services to the miners to help them be successful. So glad to be here and looking forward to the conversation.
Likewise. And when you're ready to make that move to Tennessee, we got the red carpet out. Mr. McWhorter, Stuart McWhorter, Commissioner of the Tennessee Economic Development, John Bradley, the Head of Economic Development for the TVA. Whoever you want to meet, we'll make it happen. Just saying. And now, actually, on that note, the somewhat new Nashvilleian, Harry Sudock, Chief Strategy Officer at GRIID.
Thank you, Rod. I'm Harry. I'm the CSO at GRIID. We took the company public earlier this year, and happy Foundry customer and also happy TVA customer. So you're speaking my language in a number of different areas. So it's a pleasure to talk all things halving, mining, and Bitcoin with you today. And thank you, ARK, as always, for hosting.
Absolutely. Appreciate you being here, Harry. And always, Cathie Wood, founder, CEO, and CIO at ARK Invest.
Great to be here. Love this session. Something always happens on the Bitcoin Brainstorm to blow my mind. So I'm looking forward to this one.
Absolutely. And thanks for calling in from Zurich, Kathy. Yassine, my friend, where should we start?
Let's take the 30,000 foot view on the just broad implications of what this Bitcoin halving represents as symbolic of Bitcoin as a monetary system. Kathy, it's been ARC's, I think, third halving now. Uh, and every 4 years, we always come around this event, and it becomes this really compelling marker for what makes Bitcoin so special. I would love to get maybe your take on kind of what the halving is relative to broad monetary policy and why this is so profound when compared to really other monetary systems across the world.
This takes us back to our early days with Bitcoin. And in learning about it and writing our first white paper in 2015 in collaboration with Art Laffer, when he read through the white paper, he said, whoa, wait a minute. This is what I have been waiting for since we closed the gold window in 1971. He said, I have been looking for a rules-based monetary system. And he was, fascinated by it, and increasingly so. Rod, you've met him. He's in Tennessee as well, Nashville. And he's so excited about the idea that we could be returning to private money and to get the Fed out of the equation. Now, I can tell you as an investor in the equity markets, the idea that Fed Chairman Powell can come out and all of the other governors can come out and say boo, and the financial markets freak out. Everybody freaks out because of what they're saying is it's really been quite disruptive, and increasingly so in the last few years. So this idea of a global, digital, decentralized, private, no government oversight, rules-based monetary system is pretty provocative, profound, having been through many cycles since the late 70s when I was in college, but I entered the financial markets at that time. And, I just saw money unhinged in my early days, and have been a student of, well, okay, how do we change this? And so when we stumbled upon, everybody stumbled upon Bitcoin, or at least I did. And it was, wow, this is pretty interesting. This could be transformative. And I said, Art, how big could this be? Back when it was $250. And he said, well, how big is the US monetary base? So back then it was $4.5 trillion. Today it's $7.5 trillion. That should tell you something. And he said, well, there's your answer. And so we've been running with it ever since. Could it serve the three roles of money? That was our first white paper, and we concluded yes. Could it? Is it ringing the bell for a new asset class? Yes, but in terms of this monetary system idea, the halvings, this one coming down from 1.8 to 0.9, is taking the growth rate of the Bitcoin supply below the long-term average of gold supply growth. And but the difference is, and when I say this to people, it's an aha moment for them. The difference is when the gold price goes crazy to the upside, miners come out and start mining more, and send the supply growth up. And when I tell people, in the investment world, that that's not possible with Bitcoin, it's just not possible. Again, they do a double take. And so here we are for the first time below the growth rate of gold. And as Stan Druckenmiller says, well, gold is a 5,000 year brand. That's what he says, at least how he says it. Bitcoin's a 10-year brand, and I should pay closer attention to it. And I think the halving is another one of those aha moments.
I couldn't agree more on the aha moment. Even maybe one to set the stage a little bit more, Murch, I'd love maybe to explain how does the actual Bitcoin halving work from a conceptual perspective?
Right. So the Bitcoin halving happens every 210,000 blocks. And how it's implemented is just by a bit shift at that point. So the supply halves just by pushing an integer one position over. Actually, the whole monetary policy is something like 5 lines of code. And yeah, so why we can't create more is the difficulty adjustment, which happens every 2016 blocks, where the difficulty is reset so that the next 2016 blocks will roughly take 2 weeks. And this happens on not on average, but while we're mining with the same hash rate as the difficulty, it happens roughly every 2 weeks. But it's been a little fast ever since it came. Has been.
Rich, I want to hit on your point of the monetary policy is really just 5 lines of code, because I think not many people fully appreciate that. I remember Jamie Dimon on a recent interview that he had a few months ago, where he was talking about his skepticism around Bitcoin, and that he wants to challenge, like, how do you know that it ends at 21 million? How can you trust the algorithm? How can you trust that Satoshi Nakamoto isn't going to go and take all your Bitcoin? To ask those questions, I think misunderstands you don't fully appreciate that it's really just open source code that anyone can audit, and anyone can see where those block rewards are, what the inflation rate actually looks like, and it's effectively backed by really, really compelling game theory and economic incentives, where no one is going to be able to change those codes without, it's effectively impossible to change it without changing the entire consensus. I'd be curious maybe on that front from Mike and Harry's perspective, touching on Kathy's point around the dynamics of Bitcoin miners versus gold miners. A lot of people are questioning whether or not miners are even going to have an incentive now that block rewards have been cut in half. Again, I think that misunderstands some of the fundamental game theory that miners have relative to Bitcoin. If you guys can touch on that, that'd be super insightful.
Harry, maybe I'll go first on just a couple of topics, because I know this is one of your favorites. So to your point earlier, Kathy, look at the miners, their revenue gets cut in half, right? It's not their profit that gets cut in half. Their revenue gets cut in half. What industry does that happen? Every 4 years, your revenue is literally going to get cut in half. So the miners, and today, I think about the last cycle versus this cycle. We've got a whole industry now built in North America around Bitcoin mining. There's dozens of publicly traded companies that are worth billions of dollars. They have a huge incentive not to let this happen. Huge incentive not to let the halving. And what's their ability to stop it? Zero, right? Like they can't stop it from happening. And that's such a powerful idea. And the difficulty adjustment, I think, is the other one that most people don't understand. And I always like to think of, like in the oil industry, you got a bunch of men who sit in a conference room, and they basically decide how much oil they're going to pump out of the ground, and they manipulate the prices to their benefit, right? And they play all kinds of games, and there's all these backdoor deals, and there's wars that are fought over this. And in Bitcoin mining, it's 4 or 5 lines of code. It's right there with the difficulty adjustment. Every 14 days, based on how many people are competing, it either gets harder or it gets easier. And nobody has any say in it. And it's an amazing leveling concept that I don't think most people understand. And it's an incredibly powerful mechanism where you can't play games. It's a level playing field for everybody. And it doesn't matter whether you're in the US, whether you're in China, whether you're in Russia, everybody plays by the same rules. And that's such a powerful idea that is really new to civilization in my mind. It's hard to come up with another system that literally everybody plays by the same rule globally. So it's an incredible It's just an incredible, I think the white paper will go down as maybe one of the greatest inventions of our lifetime. And we probably won't really appreciate it for another 20 years, right? Like people didn't appreciate electricity. It took decades for people to really appreciate electricity. And I think the same thing's going to be true for Bitcoin. So I'm just glad we were early to it. But Harry, your floor.
Yeah, Mike, there's a ton in there to pull on. I want to talk first just about the fundamental trade that mining businesses are in, because I think it helps clarify at least some of the reasoning as to why we sign up for a business where you're right. Like the headwinds are twofold. One, difficulty adjustments up and to the right. Revenue down and to the right in Bitcoin terms every 4 years. So it's important to understand the baseline trade that the miners are in. And it's something that we crystallized very early on, which is we're long Bitcoin, we're long transaction fees, we're short energy, and we're short difficulty. And so as long as the net of those four legs comes out positive, we have a thriving business. And what we found is that it's not always the same legs that work in the trade at the same time. There's a lot of rotation that happens across those four segments. And so if let's take two snapshots, right? 2016, it was all price up in terms of Bitcoin and energy price down over that period of time. Fast forward to 2020 and 21 and 22, you saw a lot of price up. You saw energy down and then up. You saw difficulty down and then up. And so the trade looked really different over that snapshot. And now you look at the one today, difficulty is totally dominating the story. Revenue in Bitcoin terms is down right now because of the halving, but transaction fees the year prior to the halving and now post-halving are also up along with price. And so the trade looks completely different in the 2024 snapshot, the 2020 snapshot, and the 2016 snapshot. And so that means that we need to design business models for mining that are able to withstand the worst versions of the permutations and thrive asymmetrically to the upside across the rest of the permutations as well. And so the good news is that it's not just the halving that causes a halving. We could have a doubling of difficulty. We could have a halving of price. We could have, some other permutation across the three. So the goal as a miner, when we think about strategic fundamental design of our business, is always be halving, because a halving, from a business impact perspective, shows up all the time. And so that's how we thought about the business early on. And we haven't made the t-shirts yet, but we'll have one that just says always be halving. And so the first place that we think about is electricity price, continuing to pound the table and say, we're not going to accept that price. We need to go lower. So pushing ourselves from a creative perspective around interruptibility and around grid integration, around power plant integration, at GRIID with two eyes, we have sites that are in front of the meter that leverage all of the flexibility on the energy arbitrage side. And we have sites that are 100% behind the meter that just leverage the power plant asset in a differentiated way. So the flexibility and creativity that the mining forces you into, because we always have to be halving, that's what gets me really excited. But obviously, I think there's sort of a narrative that miners are scared of the halving or the halving is a headwind. Absolutely not. The first leg of the trade is long Bitcoin. And if Bitcoin, the monetary asset, doesn't work, we shouldn't be in the trade to begin with.
I think the miners should be scared of the halving. This is a difficult time
Prepared,
for miners.
Not scared. You don't have to be scared if you're prepared.
You have to be prepared. That's true. I think it's one of the most competitive industries there is. And the miners are always driving for the lowest cost. You have to be prepared. You have to plan ahead. But Bitcoin mining is absolutely a cycle. It's a 4-year cycle. It's very difficult to bet counter-cyclical. So over the next few months, I think it's going to be super challenging for the miners. Everybody's going to be down. It's going to be ugly. Bitcoin's over. Like, you're going to hear about like the death of Bitcoin, right? And it's going to dominate because now we got publicly traded miners. It's going to dominate the news cycle. Their stocks are going to go down. It's just going to be super ugly, and everyone's going to be all worried because it's over, because fees haven't gone up like everyone predicted. Look at it, it's not going away, right? And I've always envisioned the halving actually works. Like the way the Bitcoin algorithm was written, it works in a way where every 4 years it wipes out the weakest miners. I don't know if I've ever said this publicly, but it reminds me of like a reptile where it's got to shed its skin, get rid of all the dead skin, and then it grows back bigger. And it happens constantly. Harry said, like, up and to the right is hash rate and difficult. Like, yeah, we're just continuing to add more hash rate, which is security for the network. And I think it's a really important concept. People say, like, oh, what's the value of Bitcoin? It's like, look, there are literally millions of computers decentralized all over the world, plugged in, consuming 15 gigawatts worth of power to secure your Bitcoin. Like, there's a massive amount of value behind a Bitcoin, to the point where it's hard to even comprehend how secure this network is. And I've always believed the Bitcoin price is tied to its security budget. You can only store so much value against the security of the network, and that's what we see as the hash rate grows. And when it starts to top out, it's hard to store more value. And then the hash rate continues to grow. Like right now, hash rate has been growing and the Bitcoin price kind of stabilized. There's a lot more, and I haven't run the numbers, I should have, but I think the security of the network is at least 4 or 5 times more than the last time it hit 60K. It's at least twice as much, if not 3 times more. And there was $1 trillion stored on the network the last time it hit 60K. So I kind of look at it and say, geez, there's room now for at least $3 trillion, if not $4 trillion of value to be stored on the network from a security perspective. And I just think that's
it's interesting just listening to you, Mike. I think in the and Yassine, you can corroborate this, but in the financial markets, because the spot Bitcoin ETFs have been approved, and there's been, I don't know how much is the net new, Yassine. I don't know, it's billions have come in, and these are people who, many who probably were not in the last halving and or in Bitcoin during the last halving. So it's going to be, and they come in saying, "Oh, with the halving, that means." That means Bitcoin, the Bitcoin price is going up, because they saw it in 2017. There was a little bit of a wobble before it happened in 2021. So there are expectations built into the financial market. This is a great thing, and Bitcoin's going to go up because of it. But we have a whole new layer or kind of player in the Bitcoin ETF, and it'll be interesting to see their reactions if this doesn't go as planned. Oh, halving, and then it goes up. I don't know, Yassine, what do you think?
Yeah, I mean, I think to both Mike and your point, Kathy, the dynamics of mining are, there's a very ruthlessly competitive nature to it, which points to just the beautiful free market dynamics of Bitcoin that you don't really get in any industry. So where hash rate is going up and to the right, to Mike's point, the turnover, the entities that are actually producing the hashes look a lot different than they looked 10 years ago. And so like kudos to Mike and Harry, where if you're able to survive multiple market cycles, as a Bitcoin miner, it shows that you are very well prepared. But there's also this increasing fear of like mining centralization, and there are only a few people that are mining Bitcoin. But if you actually look at the turnover of both mining pools and mining entities, it's extremely high. And I think many people don't appreciate just the consolidation that you get massive sort of sell-offs, and where hash rate draws down as well. I think obviously the China mining ban is a really, I'd say, important example of how, mining was concentrated in China. They banned mining. Hash rate drew down 50%. And there was a new market of people that were like, all right, if hash rate's going to draw down, we're going to buy your rigs and we're going to set up shop. And this is going to be an entirely new ecosystem. And so I think that is a free market dynamic that really only exists in an ecosystem like Bitcoin. And then I guess the layer above that with something like, the Bitcoin ETF for institutional holders, it's like at the margin, price is going to be determined by buyer and seller behavior. And we have yet to see how strong of a holder this ETF base is going to look like. But I can tell you there's going to be buyers of last resort. If there's this mining death spiral narrative, you're going to have a turnover of the actual holder base as well. But there will always be a market for it at every layer of the stack. And I think that's kind of what both you and Mike are suggesting here. Maybe we can circle to, Will, you focus much more on the retail side of things. I'd be curious on kind of from an educational standpoint, when you're sort of expressing the case for Bitcoin and Bitcoin scarcity, how does the Bitcoin halving play a role in sort of that education cycle for a retail investor that, wants basically sats back or cash back?
Yeah, I think the halving is a moment of celebration of radical predictability and transparency that makes for a wonderful moment for education. Like I think a few people have said, there's really nothing like this in the world. I mean, you have to kind of move outside of the realm of human invention and into the world of physics and math to find things that have this level of predictability that as a world we can socially coordinate around. Most of the world is run, well, at least all the most important things, according to Mike, the men in oil rooms who are kind of deciding how much oil is going to be on the market this year, or to Kathy's point, what the SEC or what the Fed is going to say and how they're going to move markets. I mean, this has been a common thing throughout history. I mean, French Revolution, we saw men get into a small group and say, now there's 10 days in a week and there's 100 minutes in an hour. We saw this in Mayan civilization about how weather works, and it messed up all of agriculture for them. And being able to get outside of the political, move something as important as money, which is the way we socially coordinate, outside of that political is a fundamental win and a new door that the world has walked through. And this, for people to get around and is hard. And the reason why it's hard, I mean, it shouldn't. Murch said there's 5 lines of code that say this, and anybody can go and read it. But yet this concept is confusing. And the reason why it's confusing is because every other system we use is purposefully obfuscated to remove everyday people's ability to understand it and to affect it. And so people are used to things being like, oh, it's too complex. I don't understand it, And it's a wonderful time to say how simple Bitcoin is compared to every other system you interact with in your life. And it really points to a new way of coordinating, of doing things. And what it does ultimately, what we see with our users who come in is that then they start to look at the systems critically for the first time. We start to question, how does a dollar get valued or produced? How is energy created? And, and all of this sets a chain reaction off in people's lives. Bitcoin is essentially a truth lathe that just removes layers of bullshit, essentially, that they've become so accustomed to. So it's one of my favorite ones. It's definitely, Satoshi had something in mind, understanding what, human psychology of every 4 years, bringing this topic up to the forefront. It's beautiful, but above all, it's a celebration of something that is brand new, that has been discovered and brought to this world, and it blows people's minds. It's incredible.
I want to rain a little on the parade, because one of the things that really worries me about the cycle and about the consolidation that people have mentioned is there seem to be fewer and fewer people that control the block templates that everybody is mining on. There's currently roughly 2 mining pools that host 50% of the hash rate. And I don't know if that's really the best time to bring it up, but I hope that all of you are as aware, and maybe you're in a better position than us or than myself to influence that a little.
Yeah, Murch, I mean, I think you bring up a great point, and maybe it'd be helpful to kind of discuss the context of mining pools versus actual miners, and mining pools with the creation of block templates, and how that, if consolidated, can create some censorship in a way that we want to avoid. I know we have two. We have a massive mining pool in Mike, and we have Harry, who is a miner. Do either one of you want to set up what Murch has highlighted, and maybe bring up things like Stratum and just distributed block template construction? I think that could be just an interesting.
Well, Harry, I'm going to jump in on this one. It's such an interesting topic. So we started Foundry 4.5 years ago. And when we started Foundry, we had a thesis that institutional money was going to come into Bitcoin and institutional money was going to come into Bitcoin mining. And the mining industry was the wild, wild west. I mean, it was a kind of a shit show. It was crazy, right? And Bitcoin, I always say Bitcoin, one of the beautiful things about the white paper is it feeds on humans' greed, right? Like Harry and I have dedicated the last 7, 8+ years running around trying to plug in miners to secure this network, and the computer system pays us to do that. Like, it's such a wild concept. And if you get too greedy, it will slap you down. And it happens every cycle. There's very few people that can be successful mining. But when we started, we said, hey, China built the machines. China had like 65, 70% of the hash rate, and they pretty much dominated the pool market. They had all of the top 5, 6 pools. It was all Chinese run. And we felt like if Bitcoin's going to survive, it can't be a Chinese coin, right? It just won't work long term. It needs to be decentralized. So when we really set out, we want to build out the mining ecosystem in North America. That's what we did. We were the first ones to do equipment financing at scale. We didn't want to be the biggest miner. We really wanted to help miners be successful in North America. And one of the things we said was we need to get a pool established so that we can support the North American mining ecosystem. And look, there's no harder business than the Bitcoin mining pool. I mean, it's a brutal business. And the miners in North America just took off, right? They started building like crazy, adding hash rate, tons of billions of dollars were invested to build it out. And today we have about 30% of the hash rate flows through the Foundry pool. So we're the biggest pool in the world now. So I would make an argument, Murch, is it's more decentralized now than it's been ever. It was totally dominated by the Chinese. And today there's actually a counterweight to their strength, right? And I think that's super important in terms of the future. We've had lots of discussions around how big can we actually get, right? And to be honest with you, I kind of look at it and say, boy, any more than 35% of the pool, we pretty much want to stop taking hash rate. And we topped out about 1.5 years ago we hit about 35%. And since then, we've barely been able to keep up with 30% because the network just continues to grow all over the world. Russia's plugging in machines. The Middle East is plugging in machines. They're plugging in machines in Africa and South America. And it's amazing how much growth is happening everywhere else in the world. And I think it's wonderful. It's amazing because it's decentralized and it's really, we're spreading it out. And I think that's fantastic. I do think there's a lot more that needs to be done to continue to decentralize it. Like, that's our goal, is how do we protect the network so that it can't be stopped? It cannot be shut down. China banning mining in 21, I viewed that as a nation state attack against the network. And guess what happened? Nothing. Nobody cared. Nobody cared. Nobody cared. It's amazing. Amazing. If the United States banned Bitcoin mining, you know what the Bitcoin network would say? Keep going. People would pick up their machines, they go someplace else. It's such a powerful concept.
That's really helpful insight. I'd be curious relative to Foundry as a mining pool and the way that you guys are positioning yourself. One, I think it's really interesting where you've had these internal markers of, say, we don't want to have greater than 35% because you don't have an incentive to. You want ultimately mining to be distributed because you're net long Bitcoin and you've dedicated so much hardware that is exclusively focused to mining Bitcoin. But relative to, though, the mining pool, what are your thoughts, or I'd be curious on just broader censorship concerns around specific transactions, broader sort of block creation template, and how you guys think about that, where, do you have an internal view, given that you are US based? If the US comes to you and says, here are specific OFAC sanction addresses that you cannot include in a block, how do you guys think about that?
Yeah, so on a couple different levels. One, the one thing we did that, I got half my team are like Bitcoin maximalists, right? Like hardcore Bitcoin maximalists. We support decentralized infrastructure. So we run Ethereum, we stake Ethereum. We do a lot of stuff on a lot of different protocols, decentralized AI, but most of our business is focused on Bitcoin mining. And one of the things that we did that was super controversial early on was KYC AML everybody into the pool. And we did that because we felt like the publicly traded miners were going to need that to exist, right? And basically, we've confirmed it. Like, in order for them to be a publicly listed company in the United States and be a miner, they need all of the things we provide from a pool perspective. And I think it's super important to have that ability to tap the public markets for capital to buy more machines, build out more facilities, and add more security to the network. So we service that customer base. In terms of the transaction side, we kind of view it as like email or telephone or and cell phones, like those open networks. That's what the Bitcoin network is, right? So it's transactions are just going to be processed throughout the network on an ongoing basis. You can't stop it.
It's a utility service.
Yeah, Harry, I'd love, we're super excited about Stratum V2. So I don't know if you want to talk about Stratum V2, how that works. We support, Bitcoin core developers to kind of move that forward. We were hoping it would happen faster, but it's right around the corner. So
two things that never happen on time: software development, home improvement, over budget, behind schedule. So I want to hit on a few different pieces. The first is that the other gift that Bitcoin's monetary policy gave us is and I don't think Satoshi did this on purpose, frankly. I think this is a fortuitous accident, like much of Bitcoin is. And I'm going to go into the weeds a little bit on the mining business because I think it really matters. The reason that Foundry was so successful in pulling us over at GRIID and pulling so many of the large scale industrial miners is Foundry pays us regardless of how many blocks Foundry finds. So there's a payment methodology where we get paid on a per compute basis, not on a per blocks found basis. And so that means that our pool is essentially financing our cash flows. So they're getting access to a balance sheet of Bitcoin, and that Bitcoin gets paid to miners, and they essentially make up any gains or losses by being so large and by mining for such a long period of time. So every difficulty adjustment, there's 2016 blocks. By the end of the 2016 blocks, Foundry's trued up, but they're financing our cash flows sort of within that period. That ability to finance those cash flows goes down, and the obligation goes down every single halving because the amount of subsidy per block gets cut in half. It's a monetary policy. And so the reliance of the pool business on the balance sheet is going to change as the amount of Bitcoin paid out in cash flow financing goes down over time. And so there's going to be greater incentives that are passed back to pools to be able to be, the quote unquote best block constructors. And on all of us to be the best block constructors. What does that mean? It means right now there is, and I'm going to use the rough actuals, there's about 1.5 gigabytes of transactions waiting to be included in blocks. Your mempool on your node at home has about 300 megabytes on it. And so there's a universe of transactions that are waiting for room in a block. And so they're bidding to be included. There's this open market auction that happens to get included in every single block. And so these auction dynamics mean that mining revenues, not the subsidy, but the fee component, are going to be this very dynamic, very free and open space. And so miners' jobs are going to be pushed towards focusing on that fee component more so than the subsidy, because the subsidy is now, only, 3 1/8 Bitcoin, down from 50 originally. And so the percentage of our revenue derived from fees is only growing, which means that our focus on working with our pool vendor is only going to be more so focused on how do we get the best 4,000, 5,000 of those 1.5 gigabytes into our little tiny 1 megabyte block. And so there's this huge, we talk about the creativity required on the power contract structuring side. There's going to be the same level of creativity required on the fee extraction methodologies. And so it means that there's going to be software and algorithms written and design space utilized in order to make sure that we're focusing as much of our effort, because a 1% or a 5% or a 10% improvement on the fee side is going to have very, very robust and long-standing value to our revenues, because that's what we're relying on now rather than the subsidy. And so when you talk about a protocol like Stratum V2, so the way that mining works is, and we're going to pretend GRIID is the only miner and Foundry is the only pool. Foundry sends us a template, right? This is what a good block looks like that the network is going to accept. Then we take all of our servers and perform a ton of work against that template to try to find a block that meets its criteria. Then we're going to send that block back to Foundry. Foundry says thumbs up looks good, propagates that to the network, thumbs up looks good, and the new block is added. And then the next piece of work gets built on top of the block that we just found. So who decides what the good template looks like is where all of this conversation is kind of dancing around. And so when I think about what is a good template is the design space that includes the most fees, the most revenue. And so we work in conjunction with our pool to make sure that the algorithm they're using, the block templates that they're proposing to us that we perform the work against, have maximized the fees within that big universe of 1.5 gigabytes of transactions to find the 1 megabyte of best transactions to deliver the revenues, to us and our shareholders. So that's a complicated technical process, and it's a process that's going through rounds of upgrades and rounds of refinement. Some folks are taking different kind of angles on that, but ultimately what Foundry has funded and what other open source initiatives in the space have funded in this Stratum V2 opportunity is essentially really threefold. The first is that it's a big privacy upgrade. Right now, the bits that are flowing back and forth between GRIID and Foundry are not well encrypted. And so there's a big security upgrade that Stratum V2 adds to the way that the data talks between the miner and the pool. The second is that it'll be more performant because the bandwidth usage of sending those bits back and forth will be far more efficient. And then three, and this is the most sort of business relevant, is that it opens up the design space for who builds the best block template And that lets not only, Foundry could propose one to us that we work against, or we could propose one that we work against and send back to Foundry, so long as it fits within the mutually agreed upon criteria, which the Bitcoin network broadly is going to enforce. And so there's this really great opportunity to add design space for miners to propose block templates that maybe are improvements upon the whole space. And Murch is going to be able to tell you why I don't understand how code works, but but that's my sort of layman approach to why additional block proposers could offer broad revenue upgrades for miners.
I wasn't going to disagree much at all. I was just saying I've done some research on the block template building and potential improvements thereof. And I hope you'll be happy to hear that there's efforts under the way in Bitcoin Core to make block template creation even better. And what we really are trying to do on Bitcoin Core side here is we want out of the box everyone to be able to build almost the best possible block in order to make the competition as fair as possible. What we absolutely do not want is that there's an additional advantage for the larger mining institutions to pay a few developers to eke out better templates and make even more money that way when they already have some advantages due to their scale. So one of the big efforts in that regard lately has culminated in the cluster mempool proposal, which essentially where we previously build blocks based on their ancestor sets. So looking at each transaction in the context of the transactions that have to be included before them in the block, before it. We now look at bigger groups of transactions. For example, if there's 2 child transactions that both bump a parent, we would group them and package all 3 together as a chunk. And hopefully it'll not require a lot of development and research on the side of miners to build better block templates. Where that breaks down a little bit and where it worries me is with all of the interest in colored coin protocols and NFTs on Bitcoin lately and some other more complex constructs like ZK rollups and so forth, there might be more potential for miner extractable value or even worse, MEVL to maximize revenue via more computation and actually acting in different markets to sort of collect any sort of gap between buyers and sellers. We have a lot of advantages compared to other big cryptocurrencies in that Bitcoin transactions, of course, are already immutable the way they are signed, and the order usually doesn't really matter. But if we do get more complex protocols on top of Bitcoin, we might get more opportunity like that. And it would worry me because that would be another centralizing factor.
Let me ask a question, and it might, maybe there's more to go on what you just said, Murch. But as you're all talking, has there been an experimentation with generative AI? I mean, it just seems, as you're talking, I'm thinking, wow, someone could come in and, experiment and do some, provocative things. What's happening there?
I guess I'll jump right back in. So building the optimal block template is an NP-hard problem. It's a knapsack problem, literally. And these problems are hard to solve because the complexity explodes because each choice limits other choices, and there's just this huge combination space. This is especially an effect that you encounter towards the end of the block. So if we had, for example, bigger transactions, the tail effect of do I take a big transaction early in the block or do I take several smaller transactions towards the end of the block that won't fit if I take the big one first, this sort of complexity gets a lot harder. Currently, we solve this with a greedy approach, and it works well enough because most transactions are way smaller than the block. But for example, with these big inscriptions, and maybe when a ZK rollup wants to write their zero knowledge proof of several tens of kilobytes into the block, every block, this sort of big chunks would make it harder to optimize the tail of it. I don't think that it's a generative AI or even much of an ML problem, but rather just you would use a SAT solver to find an optimal solution. The big problem with that is that it's computationally intensive and it would slow down block template creation. So when a block is found, the miner wants to immediately publish new block template, new work items to all the participants. And if you had to take more time to find a better block template, that would slow it down. So maybe they would take a multi-step process, find something quick, send it out immediately, then work on it more and find a really good block template and push it out after. But for the most part, it's just something that we know how to do already with computation. I don't think AI is going to make a big dent.
The other comment I wanted to make around the pool piece of this, and then we can probably go to a different topic, but for so long, the Chinese dominated the pool space. And when we built the Foundry pool, and we were just hoping to get into the top 5, right? So we got to be the biggest. And there was this question of like, is there an advantage of being the biggest pool in the world, right? And what I love about Bitcoin, and I think most of the world hasn't yet discovered it, is the idea that it can't be gamed. And what I mean by that is whether we mine a block or not, it's probabilistic. It's pure luck. And there's nothing we can do to adjust that, to change that. And that concept is so powerful. And what I'm super excited, I love like Larry Fink talking about Bitcoin and being like a cheerleader, and he's got his ETF and he's going to talk more and more about it. And eventually they're going to start to figure out like, where's my edge? Like how, I want to run my own pool, and I'm going to be able to get an edge over everybody else because I'm BlackRock and I'm the biggest. And you're like, I'm sorry, it's impossible. And by the time I think Wall Street wakes up to the idea that this cannot be gamed, it'll be too late. The asset class will be way too big, and it's going to be, they're all going to have an oh shit moment of, oh no, the world changed.
Absolutely. And I think Larry just joined the game. So he's new. He can spend a lot of money on supporting open source devs, hopefully, and just get in the game. But welcome to Bitcoin, Larry. Murch, were you going to make a comment?
Yes. So I agree. You can't game. You can't pretend to have found a block. You can only publish a block when you find it. I saw recently some discussion about the potential for miners attacking their own mining pools via block withholding, and the FPPS payout scheme. I hope I'm not. Well, it's been on Twitter, so everybody that wants to know knows. But the idea here is, of course, you promise to pay for every single share that a miner contributes to the pool, and if you then withhold the actual winning blocks, of course, that'll show up statistically eventually, but the mining pool would start losing revenue. I was wondering whether that had, so you can't fake finding a block, but miners can pretend not to have found a block. And I was curious what you think about that.
Yeah, Murch, I mean, we watch Harry very closely, right? Like we have all eyes over on Harry, making sure he's not gaming the system.
Yeah, I just would say that like the same comment that Mike made earlier about miners shedding their skin over time, there are only so many Bitcoin. There are only, you can't fake a deeper pocket than you have in this industry at any layer, whether that's at the miner level, whether it's at the exchanges that played games and blew up over the last cycle, whether it's the pool that's a service provider. There is a law of gravitational pull that Bitcoin introduces to all of these business models, which means that the time in between, bad behavior or misincentive alignment behavior, the time between that and the consequences, the meme the meme on X would be, F around and find out. If you F around in Bitcoin, you find out a lot sooner. And so the opportunity that we have, and the reason why I'm so attracted to building, an industrial scale business here, is that not that there's no bad behavior, but that bad behavior is surfaced so quickly, and misalignment or bad business model design is surfaced so much faster than the traditional space. I think we saw a little glimpse of it with the Melvin and GameStop interaction on the short side, where it's almost like a Bitcoin idea got injected into the traditional world at that moment, right? The dynamics, that resulted in that kind of blow up, were so heavily inoculated against that type of stuff in Bitcoin land that while all of it still happens, it happens on a smaller scale and it happens faster because we have this white blood cell idea of absolute digital scarcity.
Yeah, I was just going to loop back to Mike and the Larry Fink comment, trying to understand it a little bit. When you say it'll be too late, I'd be surprised if he wants to get into mining. I could be wrong, but I'd be surprised. Do you think it's absolutely necessary that he gets into mining? Because, when I hear him speak, I think he felt, okay, I need to get some cred here with Bitcoin, which is, the first big step. But my ultimate goal is tokenizing everything in the world, tokenizing all assets in the world. So when you say it's too late, does he have to get into mining? Just trying to understand it. And
Yeah, I guess the way I think about it is, and this is more your world than my world, but the Wall Street, it seems like the bigger you are, the longer you've been around, you have an edge. You have an edge over me. As an individual investor, you have an edge, because and Larry Fink's got an edge over you, I would imagine, in terms of how Wall Street plays out, because he's got the biggest purse to play with. And what I have found in the Bitcoin mining space is it's a level playing field for everybody. Whether you have one machine or you have 10,000 machines, it doesn't matter. And what I was trying to say is, through our pool, we have 1.5 million machines plugged into our pool. I have no edge over anybody else in terms of mining a block. Yeah, and you don't find that in any other system.
No, that I think the broader framing, Kathy, is maybe what Mike is also suggesting is that there's going to be this arms race to accumulate Bitcoin at both the nation state and international level as well.
Got it. Okay.
And it's like you can't, if you want to go in and start mining Bitcoin, you're going to have to start at ground zero. And if you want to start market buying Bitcoin, you're going to have to start market buying the retail investors Bitcoin who aren't going to sell at these prices. So it's really the barriers to entry around Bitcoin are so unique in that they're grassroots, they're highly meritocratic, and it's not, the big boys don't have an edge relative to anyone else.
Got it.
So so if Larry Fink wants to get into mining, he's going to have to start at ground zero.
Yes.
I think that's like a kind of a unique dynamic.
This is why Yassine and Rod invite me on. I ask these sorts of questions so that for the financial world, we can understand how profound what you said.
Your questions are like extremely relevant, and I think point to exactly that, where it's like people are going to assume that Larry Fink can just go in and start participating in Bitcoin, and that's not the case.
And this is where let me jump in, because we've been doing what now, Yassine and Kathy. This is episode number 10 now. We've been doing this, and it's been an honor and a privilege to get to know your team and what you guys are building. And I would just say your guys' edge, and this will wrap into like a good closing question for the group, and I want to hear from Will, which is like looking at the future. A lot of these folks like look at the past and try to your point, get an edge based on, capital, based on who they know, the 10 people in the room. Will, I love that story about the French, by the way. We got to cut that out, Michael. but not enough people are that creative to think about the problems of the future and what those problems are going to be solving. And I think those that are the most creative, especially this next epoch, are going to flourish. So I guess, that's where like ARC comes in big time. But like looking at the application layer now, what did you say? You said the radical moment of predictability. I freaking love that line. Now we have a radical moment of predictability for this next epoch. What are we going to build from an infrastructure standpoint? Maybe it's an institutional adoption, growing global mindshare. Everyone's talking about Bitcoin. I mean, we got this guy, Larry Fink, in Bitcoin now. He would never have touched it, even 1 year ago, 2 years ago. So I'm just curious, and I'll start with Will. Where do we see this next epoch, and where do we see Bitcoin going?
Well, we saw, I think, at the beginning of previous epoch 4, a lot of Bitcoin conferences were talking a lot about how do we redirect capital flows into Bitcoin. And you had some people talking about institutions coming in. We've had some people talking about energy sector. Fold was talking about rewards and consumer banking. We had all of these, and they were all theoretical. These were all, hey, here's how I think we could do this. Here's my plan. We all kind of went on our own strategies. Some of us died trying. Some of us are still here today. It's a ruthless thing. But at the end of the day, we sit here at the beginning of this epoch. It couldn't have been a better ending with the ETF approvals and everything. Like every single flow that was thought of is now either busted wide open or growing rapidly in every case. And I think all that means is, we talk, Kathy was saying gold has a 5,000 year brand. Bitcoin is going to be in this epoch a brand that is just absolutely sediments into the mind share of everybody in a way that it is going to supersede the idea of Coca-Cola's brand in people's heads, and could be so rapid and so quick that it actually eclipses where gold was despite this history. And I just look at all of these, a side effect of predictability that it is there is that with predictability can come preparedness. And when we talk about preparedness, it's just, okay, what's your strategy to prepare? But at the end of the day, what does that mean? It means everybody gets a chance to bring their best bet, their best foot forward, their best strategy to the Coliseum and let the market play out. And that really hasn't been there and like that in many industries. In fact, a lot of it is obfuscated to give edges to certain ones. But when everybody is given this, what we've seen in the mining industry is incredibly competitive and a extreme pace of rapid innovation. That because Bitcoin is an open system, both from the energy standpoint and monetary standpoint, you're going to see that application competition happen across the spectrum. We're seeing it in the ETFs already. The absolute ruthless competition that I believe every single week someone is changing their fee rates, someone is changing how we're going to add it to these funds. It's going to happen across the whole ecosystem. And you're seeing, this whole, Murch mentioned a lot of the Bitcoin new development layer 2 stuff that we're seeing with Lightning. We are seeing a absolute Cambrian explosion of the design space in Bitcoin. And so whereas we maybe in Epoch 4 was the last one, we were all kind of quietly building in our own little, in our own little corners. That's done. It is now going to be an absolute open competition. The good thing is that the winners will be Bitcoin holders. Though they will I guarantee you they are the only winners here. Us, who knows how we all fare in our own endeavors, but Bitcoin holders and the network itself is going to be vastly stronger. So I just see massive acceleration that we're moving into.
And does everybody become a Lightning company then, Mike? I think you guys are leading the pack on that side as well. But I'm curious, maybe Murch or Harry as well, like looking at the next 4 years.
I'll just share a sentiment. It's a thesis I built in mining, but I think it applies very broadly. We're exiting Bitcoin level 1 and we're entering Bitcoin level 2 now. And it means that, the best you could have done in level 1 is accumulate Bitcoin and prepare to position yourself. Level 2 is going to bring a whole new wave of players. It's going to mean a huge amount of value for end users. It's going to mean a huge amount of value for Bitcoin, the asset class. I think that the business models that worked to date are really mining, exchanges, and app layer. Those are the three areas where there's discernible revenue to be gleaned. I think that the strategies that each of those three categories brings to the market is going to be really materially different this time around, but to the massive benefit of everybody who owns Bitcoin today, who might want to own Bitcoin tomorrow, and who wants to leverage Bitcoin and Bitcoin system thinking in their own kind of day-to-day life. What I say often is that I hope to be in Bitcoin long enough to be excited again to buy cash flowing assets. Because right now, I think the monetary premium that Bitcoin is accruing is by far the most exciting part of what Bitcoin is doing. But then the purchasing power that will unlock for me to go back out to market, to go buy cash flowing assets, that's the point that we've sort of crossed the Bitcoin event horizon. We've reached global settlement, whether it's M2 or M2 plus T-bills or M2 plus T-bills, plus a huge portion of real estate. I don't know what that black hole is going to suck into it. But I know that once we cross that event horizon, the opportunity for Bitcoin native companies and Bitcoin native family offices and Bitcoin native people to go back out, purchase cash flowing assets and reinvigorate them via Bitcoin is going to be a massive, massive benefit to those people individually, but then to the economy broadly. It's how we get to 10, 20, 30% GDP growth rate in Bitcoin terms.
I think I'm very curious about this epoch in regard to what we find out, how far and how we want to scale. Because I think what we've seen in the last year, especially with the mempool not clearing since last April, and fee rates being sometimes fairly high, but now being coming back down and diminishing to somewhat reasonable levels where you can think about making transactions as an end user again. I think that as these institutions come in and the bigger players are going to try to push around way bigger amounts of money, these small payments will get priced out as it is. And the question then is, where do those payments go? Lightning is interesting, but certainly the idea that everybody would run their own Lightning node at home with 5 channels, I think we've sobered up on that one a little bit since. I think that it makes a lot of sense as a payment layer, but right now it looks like it would be facilitated by LSPs, and those seem to have a hard stance in the US this week. And so I'm wondering, and maybe one good side of this new blood streaming in to Bitcoin from other cryptocurrencies, because I'm no big fan of NFTs or anything, but I think that people that have a set of fresh eyes have been taking a second look at Bitcoin, and maybe they will, as they progress through the stages of discovering what Bitcoin is to them, realize that they have new ideas or something to contribute. And maybe we'll figure out some new ideas on how we can scale. Maybe these ZK rollups are interesting. Maybe BitVM is interesting. Maybe we finally make some headway on coin pools or on ARC or other projects that give us all sorts of different kinds of trade-offs on how we can share UTXOs and scale up from individual payments to bigger batches in the blockchain. So I think that's going to be the interesting thing to watch in this epoch. I don't know if we're going to be done by the end of it, but it'll certainly be interesting.
I want to echo you, Murch. Something I've learned from Kathy over the years is to never underestimate the power of creativity and ingenuity. And when you look at sort of exponential growth and innovation, the things that the assumptions that you might make today are likely going to look far off if you don't account for that creativity and ingenuity. And I'm very optimistic at just like the incentives to make Bitcoin work have shown through the last 4 halvings, and I think we'll continue to in the next 4 years. So I'm excited to see things arise, which I'm convinced don't exist today, which will be a meaningful part of the Bitcoin ecosystem in 4 years. So really kind of relying on free market principles, the power of creativity, the power of ingenuity, and just kind of let the market kind of speak for itself. It's going to be very interesting. I'm super excited for what these next 4 years look like in that lens.
I wanted to follow up briefly. One thing that happened in the last month was that a book was published that sort of told the big blocker side of things one more time. And I can't stress enough that how important it was to keep the block size low, because all of that effort that went to solutions like Lightning, if you look at it, the ecosystem of Lightning developers, the protocol developers, are literally at a size where they're at least as many as the Bitcoin protocol developers. And I don't think that this sort of incentive would have been there if we had just kept kicking down the road and increased block sizes. So sure, of course, it fits my worldview because I was already convinced back then. But I don't think that we would be where we are if we had gone with big blocks.
I guess just a couple other comments. When we started Foundry, Barry and I sat back and we're like, okay, how's this going to play out? And we said, we think long-term, the biggest miners in the world will be nation states and energy companies. And I'm shocked in 4 years, we literally have nation states that are talking about mining Bitcoin and doing it. And energy companies who have been experimenting over the last several years on large scale mining. And I think about, like, we went from basically me to 200 plus amazing employees at Foundry. And we're gearing up for like the next bull run, right? The next cycle, the next epic. And like, where can we go from here, right? Like, we're hiring. Like, we can't hire fast enough for what we want to go build going forward. So I'm super excited about the future. And look at it, I'm convinced any naysayer on Bitcoin, they just haven't done their research yet, right? I mean, I haven't met anyone who's actually done the research that doesn't become a believer in Bitcoin. And it's only a matter of time. I compare it to, like, I drive a Tesla, right? People that are naysayers on Tesla, I'm like, you clearly have not driven a Tesla before, because it totally changes the game on driving.
That's the story of ARK's life in terms of many of our investments. And I guess the biggest learning here for me is 5 lines of code. I did not know that. I did not. That seed, has just caused this Cambrian explosion, as Will described it. And I have to go back a little bit to my economic roots. I'm just looking at the devaluations that are taking place around the world. Many people don't know about them because they're not hitting the headlines. Egypt devalued the pound, the Egyptian pound, by 40% in March, and the UAE is coming in to rescue it. And there is stuff going on out there with devaluations. You look at Japan. I mean, it has had to intervene. What is going on here? It's very interesting. I think one of the things that's going on is Bitcoin. There is an insurance policy out there. That's the first thought, an insurance policy. What if I just dabble a little bit? And anyone who did that in Egypt or Nigeria is another one, another 50 to 60%. These poor people, to the extent they have their wealth and purchasing power in that one currency, they're learning every day. I have to change this. And they have a way to do so if they have an internet connection. So, that's pretty exciting.
I think that's a perfect way. We started off with 5 lines of code and then ending with 5 lines of code, and how simply beautiful this all is. I can't thank you all enough. Thank you so much for joining on this Bitcoin Brainstorm.
ARC believes that the information presented is accurate and was obtained from sources that ARC believes to be reliable. However, ARC does not guarantee the accuracy or completeness of any information, and such information may be subject to change without notice from ARC. Historical results are not indications of future results. Certain of the statements contained in this podcast may be statements of future expectations and other forward-looking statements that are based on ARC's current views and assumptions, and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements.